Manager joins us now. Sachin, it's a pretty weak day of trade and volatility is at the highest level and there is all around weakness. How do you gauge the sentiment given that there are so many uncertain factors putting pressure on the markets?
Yeah, hi. Thank you so much for having me on the show. Yeah, so clearly, I think the sentiment is fairly weak at this point in time, and I think it's been that for almost now nearly 2 weeks that we are seeing this clearly. And I think, but let me just also add to this is that in our interactions with a lot of domestic investors. We are not seeing that kind of any nervousness or panic or anything of that sort. So I think it's largely driven by foreign institutional investors who are really selling in the markets quite heavily, which is and ferociously, I would say, which is actually what is getting reflected in the markets at this point in time. But clearly, I think when we speak to a lot of domestic investors who are long-term oriented, they are actually thinking of capitalizing on this for their long-term investments.
All right. When you say that capitalize for long-term investments, but it's a falling knife, Sachin. If you really take a look at the last 2 weeks of trajectory of Nifty 50, it has been a downward trajectory overall with volatility in the middle. So is it really buy on dips market, or is it really stay with cash, cautious approach and let the prices settle a little?
Well, this falling knife theory and all of that makes sense for probably short-term traders and those kind of people. But when somebody's thinking about long-term investing, I think what is more important is in terms of the valuations, in terms of is the price factoring in most of the negatives which are around, or even what is going to probably play out for the next few quarters or maybe few weeks. Because what we have seen is that whenever this kind of geopolitical tensions have emerged, and markets have corrected sharply over a period of time, over the next 1 year, 2 year, 3 years, markets have delivered very, very decent returns. And you can check the data whenever this kind of wars have happened or any geopolitical tensions, or in fact, even a very recent thing when COVID happened, when we had a minus 30% in just one single month, which is March 2020. After that, we all know how markets actually bounce back very strongly. So actually for long-term investors, the way we think about it is that some of these blue chip companies today, which are available at very, very reasonable valuations, can they offer you good double-digit compounded returns over the next 2, 3, 4 years? And if the probability of that is say 60, 70, 80%, probably this is a very good time to actually invest.
All right. So sure, blue chip companies is what you also mentioned, and they are always safe haven with good track record and momentum whenever the markets look good. But apart from that, Sachin, some of the green energy space as well as the FMCG consumption space are still doing well. What will be your approach in these segments and in broader markets? What could be the areas which are looking very cheap and probably mouth-watering to invest with lower downside risk?
Yeah, clearly. So, in this kind of an environment, the FMCG businesses, the consumer businesses are more like defensives, which is where you are seeing, when investors are trying to hide themselves, they'll probably park some money. And if they have to remain invested in equities, they'll park some money in some of these businesses. But I think the way to think about it is that where is because what is relevant is only future. And from that perspective, if we believe the growth is there in some of the other sectors, say in whether it's the private sector banking, whether it's auto, whether it's financials, whether it's pharmaceuticals, some of these sectors probably offer much better growth over the next 2, 3, 4, 5 years. Thinking about the India's demography in terms of the young and the aspirational demography that we have, or even in terms of our mega trend on the export plus one, which is China plus one, Europe plus one mega trends. So there are quite a few industries over there, which today some of the stock prices are under severe pressure because of the selling pressure rather than any fundamental reason. So this is more of all technical and probably very short term or very medium term circumstances. So I think that is where probably the opportunity is much better at this point in time.
All right. So, Sachin, while you're giving a much more positive commentary on a very shaky day in the market, I want to ask you one thing. Are we also looking at the long-term impact of even whatever damage is being done at the current moment with lower rupee, oil getting a constraint in terms of the supply chains and oil price hike? On the other hand, our inflation could be pushed up because of the LPG shortage and therefore having an impact across many sectors. And that could also make the inflation numbers in a little longer period of time uncomfortable for the RBI in terms of the interest rate trajectory. Are the markets baking in any of the long-term impact of this short-term, assessment of the developments right now, hypothetically thinking that this de-escalation could happen in some time?
Sure, I understand where you're coming from. I think the way to think about it is that as an investor, we have to be always optimist. That's first point. Second, I think more important is that do we believe that this war will continue for more than a few weeks or a few months? Because, whatever you're talking about in terms of hyperinflation, rupee depreciation because of higher oil prices, gas prices, maybe all of this will reverse as soon as there is a de-escalation in the war. I think that's the other side of the coin. And if that happens, then obviously there is no long-term impact. These are all short-term issues. And that's why I mentioned that blue chip companies are the companies which will actually be able to survive during these difficult times. And as soon as the times get better, they will actually emerge even more stronger. So that's how we are actually positioning ourselves.
Point there. I have to play devil's advocate in the interest of the caution and the nervousness in the market. But thank you, Sachin, for giving a very positive outlook and also the pocket of safe haven of blue chip companies with good track records at good valuations right now for a long-term investment. Thank you so much for joining us with your expert take on.